안녕하세요. 금융투자협회 조사국제부 류정선입니다. 오늘 웨비너 발표는 영어로 진행될 예정이나 다수의 참석자분들께서 국내분임을 감안하여 저는 한국어와 영어를 병행해서 진행하도록 하겠습니다. 오늘 개최하는 저희 금융투자협회 글로벌 투자동향 제10차 웨비나에서는 최근 코로나19의 재확산이 꺾이면서 확진자 수가 다소 누그러지고 있는 인도의 금융투자 시장 현황과 포스트 코로나 시대의 유망투자 섹터 및 업종을 살펴보고자 합니다. 금일 발표는 인도의 유명 미드캡 증권사인 스파크 캐피탈의 주식 전략 담당 가네슈람 제이아라만 상무, 기관 투자 담당 거라브 제인 이사, 그리고 인도투자청의 인프라 및 금융투자 담당 프리르나 소니 이사님께서 해주시겠습니다. 웨비나 신청 시 보내주신 질문 내용은 최대한 발표에 반영을 해보았고요. 그 외에도 발표 중 질문이 있으시면 마지막에 진행될 Q&A 세션 전에 미리 올려주시기 바라며 발표가 모두 끝난 후 Q&A 세션에 답변 드리겠습니다. 그럼 이제 본 발표를 시작하도록 하겠습니다. Mr. Gaurav Jain, over to you.
Thank you, Teresa, and a very warm welcome to all the participants. I'm Gaurav Jain representing Spark Capital. Along with me, I have Ganesh Ram, who is the head of our institutional equities business, and Prerna Soni from InvestIndia for this webinar on India macro and market opportunity. It's a pleasure to be with you here today to discuss about what's happening in India. We have raised 2 waves of this pandemic and have come out with a lot of rigor and positivity, which is what we want to discuss today with you through our presentation. As has been discussed, Ganesh Ram will have a brief presentation with all the topics that we have discussed to be covered here, post which we will have a session on the PLI opportunity, which is the manufacturing foray that India is or want to make on that by Prerna. So with that, I'll just hand over the mic to Ganesh for his presentation. Over to you, Ganesh.
Thanks, Gaurav. Good afternoon to all of you. Thanks for your time. I'll just give you a quick background on Spark Capital. Spark is one of India's leading investment banks, and we are India's amongst top-rated brokerage houses especially for equity research in India. We should be ranked number 2 in the country. And we work with about 250 to 300 institutional investors globally who invest into Indian secondary markets. Equity research is primarily what they look at in a firm like Spark. We have about 75-member team in Spark within this business, which we track about 250 large and mid-cap companies on their prospects and how our investment recommendations happen, and that advice we give to all our clients and prospective clients. I just wanted to give you that brief background on myself. I've been with Spark for now 15 years. Before joining Spark in 2006, I was with Standard Chartered Bank and HSBC for about 5 years, slightly more than 5 years, as a credit analyst before I joined Spark to set up the equity research desk in early 2006. I was the head of research and the financial sector, the banking sector analyst for a long time, for the first maybe close to 10 years. And for the last 10 years, from 2010 to now, close to 11 years, I've been writing India's strategy or helping investors form a view on how their India equity portfolio should be, which kind of stocks they should be owning, not owning, which sectors, what are the key themes to look at India, and how the potential returns on their investment should play out. This is what I recommend investors. I'm in the Asia Money broker polls and the institutional investor broker polls. I've been ranked consistently in the top 3 analysts in India for the last about 12 to 13 years. That's the background on myself and on Spark. Gaurav Jain, he drives all our Singapore, Hong Kong, or Far East Asia sales initiatives. And he's been with Spark. He joined us recently, but he's been with various other brokerages in this geography for the last close to a decade or more. That's background on both of us. I thought I should give you this background before I get started discussing India and Indian outlook. In that light, I'll just share my screen and I'll present to you the thoughts. So just hold on for a second. Can you confirm seeing my screen? Can one of you? Gaurav?
Yes, Ganesh.
Perfect.
Yes.
Before I get started, a request to participants: if you feel I am talking too fast, or if you think I should explain any chart or slide better, please feel free to tell me accordingly, and I will change my way of talking. So that's a request from our side. So firstly, let's get started discussing on the COVID wave and how India is recovering from it, the impact it had on us. Now, pretty much from last 15 months, if you see the screen out here, in the first wave, we peaked at around middle of September with a little below 100,000 cases per day, and it in early mid-February we had reached as low as 10,000 cases a day, and it appeared that India had weathered the storm much better than many other countries. But then came the shock in March, April, and early May. We spiked at more than 400,000 cases a day, and that shook pretty much the entire country, and literally all of us had our somebody we knew, in our immediate family or friends or colleagues. We could literally feel the impact of this, and it had a scar. Okay, but since in the last 45 days, the cases have materially come down. And as we speak today, the cases went below even 40,000. I think we ended at about 37,000 cases today. The recovery rate has been pretty good, especially in this month. And as we speak, the total number of new cases are below the cases who are discharged or cured, or the death rate has always been low in India. What has also improved materially is the positivity rate, which went as high as 22%. What I mean as positivity rate is for every 100 persons who get tested for the virus, 22% were testing positive, and now that number is now back to 3%, which is actually a big improvement. The broader recovery rate, which had improved all the way to 95%, fell to 82%, and now it's back at 97% of the total COVID testing positive cases have recovered. This is so we are materially improving, and the recovery is very, very sharp. And as a result, the economic activities are beginning to normalize, and as every passing week, the improvement is very clearly seen in terms of the economic activity on the road or on the business side, the traffic, and all the things are, I won't say normal, but it is clearly on the path to normalcy. What is also helping in India is the ramp up in the pace of vaccination. During April, we saw the vaccination improve to almost 3.5 million cases, 3.5 million dosages every day. But during May, it had deteriorated, and it needed us to ramp up our new supplies of vaccines. And in the last week or so, we have seen a material improvement. We are seeing now almost 6 million vaccinations every day. And India has so far vaccinated roughly about 19% of its population. And the recent trend is suggesting to us that if we are able to vaccinate about 5 million dosages a day, we should be able to reach roughly about 40% of the total population vaccinated by September. And of course, we should not be looking at 40% of total population. We need to be looking at population above the age of 18. And if you break that up, India has the world's highest population below the age of 18. It's more than China also. So that means this number will, on the adult population, we should be roughly about 70%. And that's a very healthy number. And that means that herd immunity is in some form. India should be looking at herd immunity by around in maybe another 2 to 3 months. That gives us very good confidence, and that gives us the vaccination supplies, the trends, and the acceptance of vaccination by the people at large also gives us confidence that we should be able to achieve this in the next 2 to 3 months. Hopefully, which means by then the economy is on track, and the recovery is on both the social front and on the economic front, is we get into a recovery mode by then. This is our base case expectation. Seeing the vaccination, seeing the cases, this is the base case hope. Now, there are fears of a third wave which are there. Mathematically, it's possible, but seeing the vaccination trend and seeing how it should play out, we think the probability of a third wave appears very low to me. But you never want to, unless the virus mutates into newer forms and threatens us, which looks like the vaccine is is giving us protection for any variant. We don't know if the third wave can be as potent as the second wave was. This is my initial conversation on the vaccine front, on the COVID cases standpoint. If you have any questions, I'm happy to address. Otherwise, I'll go to the next section.
Ganesh, we'll take the question at the end. So
at the
maybe
end.
we can.
Okay.
Yeah.
Which takes us to the discussion which we wanted to primarily focus on, which is how should India structurally evolve post the pandemic? I'll try to keep the conversation as simple as possible without trying to bring in any complications to the discussion. But the basic most important point is India is, along with United States of America, India is the only country which is 15 months after the pandemic started. The foreign exchange reserves have ballooned, and the excess savings in the economy, is my biggest source of comfort. Bank balances with corporates and with households have swollen during the pandemic. India is the confidence for people like me who look at India investing recommendations for institutional investors globally. The primary source of comfort comes from the fact that India is seeing a surge in savings, and it's primarily come from foreign direct investment, foreign portfolio flows, non-resident Indians transferring money into India. Exports have actually done well for us during the pandemic, especially in certain sectors like, say, in pharmaceuticals or in agriculture. And we seem to have become much more resilient economically during the pandemic than we were before. And the primary source of that is coming from the savings which have materially expanded during the pandemic. In addition, there is a wealth effect, which is something which is unprecedented. What I'm highlighting is this point, which is during this year, we have seen equities, bonds, gold, and property give positive returns, and that has a wealth effect. So that is something very underestimated but very important in my assessment, the wealth effect of all asset classes doing well. How is all getting converted into demand? Is government is doing the heavy lifting, in the sense they are borrowing 2 times what they used to borrow pre-COVID, and they are spending it on infrastructure, and that bodes very well. And interest rates have materially come down during the pandemic, due to which consumers are capitalizing on it, using the money excess savings, the low interest rates, to start spending it on buying cars or two-wheelers or houses. So we are noticing certain categories of consumption materially pick up. In fact, it's much more than what it was pre-COVID. For example, properties sold much more. So that gives me comfort that actually the pandemic has actually been a blessing in disguise for the economy in India. And that's a very important point I wanted to highlight. So our broader point is demand recovery. We also think companies' pricing power has improved because of consolidation. And what I mean as consolidation is market shares in multiple sectors have got consolidated into the hands of a few players. And this is happening in about 20 to 25 sectors, different industries. And this is happening over the past few years. What this does is it reduces competition. And during periods of inflation, especially during commodity prices, elevated commodity prices like now, like steel or Brent crude oil, or it could be copper, pricing power is important. And we think consolidation is a very powerful reason for pricing power. This is the third point. The fourth point is, due to the lockdown, managements have effected structural changes to their cost structure, so that even in a normalcy scenario, we think operating costs will be lesser than what it was pre-COVID, which means operating leverage. Apart from this, we think the impact of India reduced the tax rates on corporate profits about 21 months back. And that should lead to lower and that should lead to better earnings, apart from deleveraging, which is happening currently. So when we weighed all these points, we believe that India is at the cusp of material improvement in earnings growth and a broader economic revival over the ensuing 3 to 4 years. So after about 10 years of down cycle, which was pretty much from 2011 to 21, 20 maybe, I am and as a strategist, I've been most times cautious on model portfolio strategy during this period. I am very positive on how India can recover post-pandemic, and I'm guiding investors accordingly. This is an important point in my whole conversation. I also think, I mean, the ensuing slides are talking about these points in detail, but I will want to, broadly highlight to you. This slide talks to you about the information, the key data points on the savings, which point I was telling you, the accumulation of in the bank accounts. There are a lot of data points supporting that argument. This slide is more about the industry consolidation, which I was referring to. It has across about 15-20 sectors, how market shares have evolved in the last few years, and how the consolidation is playing out. This slide basically looks at our profit cycle during early cycles of inflation. We have noticed that corporate profitability materially improves. We saw it in 2000 to 2004-5 range, that period, how corporate profitability improved, and that led to economic revival. We saw that, we think that is due to inflation coming back. Inflation is very important in India. Deflation is a problem for corporate profitability. It's not just India, it's globally, but it's a little more exaggerated in India. Inflation is good for corporate profitability. In fact, when falling periods of inflation are actually bad for corporate profitability. In India actually benefits. We think after many years, inflation is heading up in India. So this slide talks to you about the importance of inflation. So it is demand recovery, consolidation, and inflation. This leads to pricing power, which is my key points, which I'm highlighting out here in these slides. This slide looks at the real estate sector, where we see after 8 years of sluggishness, we see real estate in India, basically residential property, houses, and we are confident that after years of sluggishness, the real estate cycle is witnessing a turnaround. We also think uh, uh, there are multiple drivers which are getting in place for the corporate capex cycle to pick up. And when I look at the benefit of corporate tax rate cuts or lower interest rates, this is one reason. The second is when I look at certain specific sectors like cement or steel, the capacity utilizations have reached 87 to 88%, due to which corporates in these sectors will want to put up new facilities, new capacities to meet the likely demand in the next few years. And they've also deleveraged, which I was telling you. And that should give the corporate balance sheets the power to undertake capex. We also think when real interest rates are negative in India, and when inflation picks up to 5%, what we call in India as WPI is wholesale price inflation, capacity utilization improves, and that leads to capacity expansion eventually. So when we weigh it all in numbers, we think the next 3-4 years should see steel, cement, power, especially in renewable power and oil and gas refining capacity expansion beginning to start in India after almost 10 years of being lull. Gaurav started talking, and I think Prerna will also talk about the PLI. India started during the pandemic something called production linked incentives. Okay, PLI. PLI is basically to encourage companies to put up manufacturing capacities in India, so that India can do two things. It can reduce what it imports, and it can also act as an export alternative to China. And that is something where in various segments, India is encouraging by giving incentives. And what we have noticed over the last 12 months, if you see the companies out here, you will see even Korean companies like say Samsung or there are almost 70% of these companies are multinational corporations, and they have expressed interest to put up new manufacturing facilities in India to not only manufacture it for India's requirement, but also act as an export hub for it to be exported into other countries. We are actually very positive on the measures being taken, and due to that, we also see a capital expenditure likely to be incurred to to prepare or to build these factories. And this will be across multiple sectors like mobiles and pharmaceuticals, solar panels, telecom equipment, automobiles, and IT sector hardware. It could be electric vehicle batteries, and it's about 15 different sectors. We also think as a result our exports, which have already started improving in certain segments, are showing good traction. I'll come to the stocks in a minute. Before we wind up the discussion, we'll also give you a quick background on the new age businesses on India. So first is on fintech. Now, India has about 4,000 odd fintech companies. They are across payments, lending, wealth, personal finance, insurance, and whole host of financial fintech categories where we are noticing. India started something called UPI, Unified Payment Interface, where there has been a massive jump. As you see here, 15 times there has been a jump in the payments undertaken by individuals in the last 3 years, and this is a revolutionary change which is happening in India, which is being driven, and this is dramatically changed the landscape of how payments used to get done vis-a-vis it was how it was done years back to now how it is being done. And I think this evolution is possibly one of our biggest changes that we are noticing. What we are also seeing a big change is the hyper local delivery market. So you would have heard of companies like Swiggy, Zomato, or Dunso. They are like the Mithuans of the world. So the hyper local deliveries is something that we have seen a huge opportunity. The size in India's online delivery market is expected to be about $13 billion. Fintech, we believe this to be about $84 billion in potential opportunity. Currently, it's about $31 billion. E-commerce, in terms of the Flipkart, Amazon, Snapdeal, Big Basket, it's again changing the way Indians shop, and it's further got accelerated. What would have happened otherwise in 10 years, it's happened in the last 1 year during the pandemic. We are also seeing a lot of new startups in the agri-tech space, and these kind of companies have raised $250 million, which is almost 3 times the funding they got the earlier years. So, and we think this could be with the way the rural internet penetration is evolving, we think this could the digital transformation in rural could further accelerate in the next few years. This is a sector that we seem to be India has a lot more potential than what it has shown currently. Before we wind up, I'll just show you our model portfolio in terms of I think this conversation is more to discuss the macro, so I'll not discuss the stocks in detail. But broader point is we are very positive on banks, on Indian consumption, both discretionary consumption primarily, India's industrials, infrastructure, real estate, and basically the capex sectors, and lastly pharmaceuticals. Where we are underweight is on life insurance, oil and gas, energy sector, consumer staples, which are extremely expensive stocks, and lastly, it's on information technology sectors, where we think the earnings expectations are a little too optimistic, where we think there is scope for some downgrades in both earnings and multiples. In the interest of time, I'll maybe stop here. And if you have any questions, I'm happy to answer. Or if you have any of my previous conversations, previous part of the conversation to be clarified, I'm happy to.